Good morning and welcome to the Golden Nugget on the legendary Verified Investing YouTube channel and the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter. We went 5 for 5, 100% win rate last week. We gave you out all of the trades pre-FOMC, prepared you for the volatility. If you stuck to the game plan, you made ridiculous gains. We're going to talk about it, but again, welcome to the Golden Nugget. I'm Drew Wolfer, your golden guide to everything that's happening inside of the metals markets and the broader financial markets. And this is the place where you come for the braids, you stay for the trades. And I just wanted to welcome you to the Golden Nugget and thank you for showing up. So for anybody that hasn't been here, what we're going to do first is we're going to gauge gold. That means we're going to do TI and gold, show you all of the trades that, absolutely killed it last week. Then we will do the exact same thing on silver. The only difference is that we will also be giving you new trades for this week on both of those assets. Then we will get into what is called the commodity compass, tells you everything that's happening inside of the, the broader markets and inside of the metals markets as well, what's going to be moving them over the next week until you see me next week at 11:30 Eastern Standard Time right here for the Golden Nugget. Then on the fourth segment, we are going to do what is called the Golden Nugget, which is where I give you something that I teach inside of the Golden Opportunity, which is the training that I brought out in conjunction with Verified Investing. And I'm going to give you kind of like a sneak peek as to what is in there, just a little tidbit. And if you want to get into the training, it is the first link in the description. Secondarily, we will then get into two special reports, which I won't tell you what they are until we get there, and then we will do the economic calendar and tell you everything that's going to be happening over the next week until you see me yet again next week at 11:30 Eastern Standard Time. Now, for anybody that is making money off of these trades that we're giving out, this is my only call to action for you, other than, go check out the Golden Opportunity training and, get trained on exactly how to spot these setups yourself. That way you don't have to rely on me to do it, once a week. Drop something in the comments section for me if you're having a good time. I appreciate you. Now, we're going to get into our first segment and not waste any time. So let's go ahead and gauge gold. Now, let's talk about what we did last week. And we kind of prepared you for the FOMC. It was pre-FOMC, and we gave you out all the levels. It was absolutely tremendous. Our trades were ridiculous, man. So we're not going to go over the trades that didn't hit just to save time. Like these all didn't hit. None of these hit. That's fine. Those levels didn't hit. This level didn't hit because we didn't actually lose this 200 moving average, or this 2.236 on the trend-based fib in any significant way. But what did hit, right? Well, first and foremost, let me show you what hit. Give me 1 second. Where's it at? Bang. Okay, so if you were paying attention last week, we gave you out all the key levels, all the trades. It was absolutely insane. You got to go down to the 5-minute chart to see this bad boy, and we're going to do it. We might as well. Okay, so this was the volatility that I prepared everyone for. I said, look, if we come up here and we hit an SFP of this previous high, right, which we did on the 15-minute chart, right? Bang, this was our level. We said set your stop loss outside here at about, $37.15, $37.20, something like that. You enter right around $3,700. It's a key level, absolutely psychological level, and you ride it all the way down to the point of control. Bang. Target acquired, target absolutely smashed. Then once you got down to the point of control, guess what you did? It's very, very simple. You could have taken this trade twice, by the way. Not this one, but the one that I'm about to show you, okay? Bang. Point of control, long. You could have taken it here, and you could have taken it here, okay? And then you never would have gotten stopped out. You never would have even come close to getting... I won't say you never would have came close, because you would have came, kind of close here. But all you did was set your stop loss outside of these previous lows right over here. Bang. And as you can see, we came down. We SFP'd those lows. Boom. Pumped up. Absolutely smashed our target, came up to 37.08 and said, hey, we're going to take profits at a new all-time high. Now, if you left a runner, you were wildly profitable. So that was trade number 2 that hit. What was the third trade, right? Well, if you took that trade, way back here, if you didn't get into that trade, you definitely were able to get into this one, okay? So this was where we longed the 2.236 bounce, okay? And I will show you what that is. This is the 2.236 we were talking about right here, this level. And then again, you just set your stop loss outside of these lows and you ride it back up to all-time high. So once we regained this and we back tested it right here, bang, boom, flying high, baby, flying high right after a rate hike. And here's a third trade that if you did take this, you became wildly profitable. I did not take this trade because we were already in the other previous longs. So we did not take this trade. So I didn't even add this to the win rate or anything like that. So technically we could have been 4 for 4, just depending on what you did. But yeah, as it sits, this was give me one second. This was regaining the macro and micro ascending triangle, okay? So what was the macro and micro ascending triangle? It was this right here, right? This is your macro one, and then this is your micro one. As you can see, we got above it, bang, you enter, you long it, and you absolutely smashed it. And that's all great. That's all great. So a lot of the trades that we had last week, they are still going to be in play for this coming up week, but I'm going to give you the new ones, okay? So just think about the levels. Remember last week, the levels that did not get hit, right? We've got a bunch of them. We've got, this short, this short, this short. We've got this long, this long, this long, right? None of those all got hit. So if you don't know what those are, go and check out the Golden Nugget from last week and you'll get all of those trades, right? Secondarily, you can long this again down here if you come back down to the point of control or the 2.236 fib. So both of these trades right here are still in play. The only difference is that your targets are going to be, higher than they were last week when we were taking them, because now gold has set a much higher range, okay? So what are the, trades that we can take this week, right? What's actionable? Well, it's very, very simple, okay? We're coming up to the 200 moving average right now, and we would like to see us continue that. We've got a nice kind of symmetrical triangle that's happening. As you can see, bang, bang, symmetrical triangle in an uptrend. This is bullish bias, but does not necessarily mean it's going to break out. So here's what we're doing. First off, you can short at the value area high right here, especially if you get a swing failure pattern and a bearish divergence. You set a new high here, bang, that's a perfect shorting opportunity. You're probably writing it down here to the point of control, and even previously before that, these previous highs right here, just front run them, right? Secondarily, we have shorting the top of the parallel. It just depends on where you get in, okay? So if you come up here, you reject from the parallel. I mean, this is a massive, massive risk to reward ratio on the trade, especially if you get a bearish divergence up here. This is short city, same exact price targets, the top end and the point of control, which point of control is down here at about $36.45, and those previous highs right around $3,700, okay? So let's just be safe, say those are your two trades for your shorts. Now, secondarily, for your longs, okay? You can long the 200 moving average bounce, okay? But you want to make sure that you set your stop loss pretty decently, tight here under these previous lows, because at the end of the day, well, honestly, you probably don't want to set them under those lows. Sorry, you want to set them under these lows, because if you lose this 200, you back test it bearishly and you fall, that's where you want to start entering shorts, okay? And I will actually put a short there as well, just so that everybody knows exactly what to do. If you lose this, you're shorting. Okay, shorting down again, $3,700. So you come down here, you bearishly back test it, boom, you blast down. You're shorting, let me type that in, short to 200 MA. Oh, we're on the wrong chart. I do not want that trade. I do not want that trade. Cancel that one out. Cancel that one out. Do not worry about that. We're at the 50 moving average on the hourly chart. We were still on the 15-minute chart. That is my apologies. My apologies for that. Now, secondarily, short your parallel, short your value area high rejection, setting your stop loss outside of the parallel. You especially want to short here with a bearish divergence and a swing failure pattern, okay? So here's your longs, 50 moving average bounce, okay? If you bounce from the 50, you are longing, right? Secondarily, if you get above the parallel, again, you are longing, you are setting your stop loss below the previous highs, and you are longing probably up here to about $4,000. Okay, now you can take profit at 3,900. That's a key level. And then we can enter one more other short right here, which is going to be if we lose the 50 moving average, we're taking this down to at least the 100 and potentially the 200 and these previous swing points at $3,700, setting our stop loss just below these highs right here. Okay, now let's get into what is called the silver snapshot. Silver, we absolutely killed it on last week as well. Silver, we had a bunch of no trades, right? So if you want these trades, go back to the, the video last week. And all of these were no trades for whatever reason, right? Whether it was, we needed an SFP, we needed a, bearish divergence, we needed, something, right? And as you can see, a lot of these levels, they just didn't even come close to getting hit, right? Now, secondarily, let's talk about what we can do now, okay? So, let's talk about the trades they hit first, actually. We came up, we bounced, okay, from the 1.5 trend-based Fibonacci level. This was perfect. You had 3 chances to enter. We took it all the way up to the 1.618. Perfect entry, perfect exit, almost zero drawdown on this trade. You had 3 chances to get in. Absolutely ridiculous trade. It was absolutely perfect. Then secondarily, what did we also do? We had this long right here where we took out the ascending triangle. Let me show you what the ascending triangle is. Right here, this red line, right here, this green line. Big ascending triangle. We back tested it finally after we had broken out. We took this trade twice. We took this trade last week, bang. We took this trade this week, bang, right? Absolutely astronomical gains. And if you took this trade, I did not take this trade because I was already in those longs, right? But if you took this trade once we regained the 200 moving average, again, wildly profitable. Anybody that left runners and took profits up here at, almost $44.50, you're an absolute animal. Good trade. Everybody that's making money, drop it in the comments section for me. But let's talk about what we can do now, right? Okay, so we've got this long potentially, right? If we come back and we back test this 1.618 Fibonacci level, bang, we're bringing that up to new highs, okay? That's first and foremost. Let's move this up. Okay, I would say right here. If we do not get an SFP at these highs and we come up, when we gain this value area high here, you can start entering right around $44.35, but you need to not have a swing failure pattern up here, okay? That is a long that we can bring up to about $45, and our ultimate target is $45.86, which is right at that 1.786 Fibonacci extension level. Now, secondarily, if you get a rejection at the value area high, you can start shorting down to the 1.618 fib or the top end of the macro range right here, which is the value area high, right at about $43.30 all the way down to about $43.13. Obviously, levels to check on the way down are going to be your 50, your 100 moving average, okay? Then, if you lose the 1.618 Fibonacci level right here and the 200 moving average at the same time, this is short city down to at least $41.35, okay? Secondarily, if we get this SFP way up here, right? SFP and a bearish divergence up here at these new highs, if we get new highs, you are shorting down to the 200 moving average. At the very least, you're trying to short it down to the value area high on the macro range, and potentially the 1.618 at $43.13. So that is essentially what I am seeing inside of the markets right now. Let's move on to our special or all of our other segments, right? This segment is going to be called the commodity compass. So what is actually moving the markets right now? Well, gold hit fresh records amid dovish Fed bets. Okay, so spot gold went to almost $3,800, like $3,791, and markets are pricing in further rate cuts. Then you've got Fed Chair Powell. He's striking a cautious tone in his speech from last week, right? Saying, hey, we're probably going to cut more rates. There's dissension in those ranks too. We'll talk about it here in just a second. And then we have the Organization for Economic Cooperation and Development saying that the Fed has at least 3 more cuts in them, okay? projecting that our interest rates are going to fall from 3.25% to 3.5% by spring of 2026. So that's like in the next 6 months. The flash composite PMI also slipped to 53.6, showing moderate expansion. Okay, very, very slim expansion. Now, let's get into what is called the Golden Nugget, where I give you something from the golden opportunity. And again, if you want to understand how to trade inside of any financial market, get inside of the golden opportunity. I promise you, you are going to get a high level education, and you'll see exactly why I have an 87% win rate. Okay, documented, that you can go check anytime you want on the Verified Investing website. Now, why do real yields matter inside of gold's trajectory? So this is something that I get asked a lot, and this is something that we always talk about. Real yields basically mean how much are you going to make on your money if you are to loan it out, okay? So when those yields drop, it is not as advantageous to hold a depreciating over time asset like the US dollar instead of a non-yielding traditional asset like gold, okay? And a lot of people are going to take their money out of the banks and put them into speculative assets like, Bitcoin and the stock market, or the tried and true methods like physical gold and silver, okay? Then secondarily, whenever the Fed is cutting interest rates, they're tipping their hat and they're giving like a silent nod to, hey, our currency isn't as valuable as we would like it to be, right? And because think about it like this. If I know that what I have is valuable, right? Am I going to cut the price on it, or am I going to raise the price on it, right? The barriers to entry. You're going to raise the price on it. So when things become less valuable in their eyes, which would be the US dollar, they're going to cut the barriers of entry to them being able to loan that out. Okay, so let's get into the fifth segment now that we understand why real interest rates and real yields matter. And let's talk about the market movers. So we had a record gold rally, and momentum is playing in our favor. We're maintaining strength at those fresh highs, okay? And market participants are piling into gold on rate cut expectations and geopolitical anxiety in the coming months, right? So analysts at Deutsche Bank are actually forecasting a $4,000 per ounce gold in 2026, okay? I'm forecasting it to be a little bit sooner than that, but strong central bank demand, dollar weakness, and further economic easing. Then we have our momentum and our inflows to the ETF. So remember what we were talking about last week with the, record numbers coming into the ETFs for gold, the money that's flowing into them. Then we have China is moving in gold and bullion and their infrastructure. They're literally and actively courting foreign central banks to store their reserves in Shanghai, and they are challenging London and New York. So that is something you always need to keep your eye on. China is a big mover in this, and it is a BRICS nation, okay? Then we have our de-dollarization and our reserve shifts, okay? So central banks are signaling reduced reliance on US dollar holdings, and 95% of them, and this is because they're increasing their allocations to gold, and their gold is outweighing their treasuries now, okay? So what does that mean? 95% of central bankers said that gold reserves would rise over the next 12 months, okay? Then we have our corporate and our macro risk sentiment, okay? We had a survey of corporate CFOs, and they're suggesting that optimism is growing, but the tariffs and the cost pressures remain at the top in terms of their concerns, right? These pressures feed inflation and risk premiums, and then obviously help bolster a floor for gold. Now, secondarily, we did have slower business activity in manufacturing inventories, okay? This is signaling global softening in the economy. And then we also have our recession fears of slowing and leading indicators like PMI and business confidence, okay? Now, what's our last segment before we get into the economic calendar? The central bank watch, okay? Now, the US Fed and their internal dynamics are getting a little bit dicey, okay? Powell has said that there is no risk-free path. That's a pretty bold statement because he's basically cautioning and he's signaling caution and flexibility in rate cutting, okay? Then dissension in the ranks. Stephen Miron, he's a new Fed governor. He pushed for a 50 basis point rate cut rather than 25 basis points. It's pretty crazy, right? Now, what you need to watch for. Fed speakers, minutes, and inflation commentary, okay? Any hawkish surprises could absolutely move gold to the downside, right? We are expecting dovish. We are expecting rate cuts, not raises, okay? Then we have our global central bank moves and our reserve policy. So the surveys say 43% of central banks expect to increase their own gold reserves in just 2025, and no central banks forecast a decline. AKA they are not selling, okay? Central bank gold buying has been accelerating, and we have over 1,000 metric tons per year in recent years, okay? And we're not quite on pace for that this year, but we're very close. Now, let's talk about the economic calendar and everything you need to know before you show up next week at 11:30 Eastern Standard Time to your golden guide. Again, pro trader Drew Wolfer, I appreciate you. Now, we have on Thursday, durable goods, okay, that's at 8:30. Then we have GDP and personal income and spending at 8:30 on Friday, okay? These are two big ones. You got to watch out. And then the real big dogs come, right? So Monday, there's not really anything, but Tuesday, we have PCE price index, okay? This is our Federal Reserve's preferred inflation gauge. This is going to tell you a lot going into next week. Secondarily, we have employment cost index on Tuesday. Both of these things happen at 8:30 Eastern Standard Time. Then guess what? Wednesday, right before you see me, non-farm payrolls and unemployment rate. Then we have our average hourly earnings. Those are both at 8:30 a.m. We got a big week coming up. You've got the levels. You've got the trades. I appreciate you so much for showing up. I will see you in the next Golden Nugget next week. If you want to learn how to trade gold, get into the golden opportunity. Seriously, this is your golden opportunity to build wealth through one of the greatest generational transfers that we're seeing. Seriously. I can't stress it enough. Having this skill is something that can pay your bills in the future. So with that being said, thank you all so much for showing up. I will see you in the next video. Everybody have a wonderful day.
Hey guys, Lawton here with Verified Investing, back with another video from Kinesis. Thank you so much to Kinesis for sponsoring this video. So going onto the homepage, you can see that I'm logged in to Kinesis.money, and I want to highlight something I really think is cool. You guys know that I'm a trader, a pro trader here at Verified Investing. And did you know Kinesis gives you another way to trade? That's right. You're able to directly trade on the Kinesis platform and earn physical gold and silver while doing so. You can see here their trading platform and their charting platform is actually integrated with TradingView. That means the same charts that I'm used to using, that Gareth is used to using, that all of us here at Verified Investing are totally accessible for you to use. So this is a seamless transition if you want to chart on here. You can even see the order books and the history. Right. So if I want to put in a trade, I can put in the price in USD or the amount in KAU as one of their pairings. I can set a limit order, stop limit, trailing stop, whatever I want here. And I can do good till cancel or fill or kill or whatever else I need. Additionally, I can see all of my orders down here. Going on the left side, I can see all the different pairings that Kinesis has on their exchange, such as Bitcoin and Ethereum. Really, really cool. So not only is it a platform that lets you earn money and earn physical gold for doing anything. If you're trading cryptocurrency anyways, Kinesis could be an option for you as well. Kinesis is really cool, and there's way too much just to talk about in one video. But if you want to learn more about Kinesis, go ahead and check them out in the link in the description. Thank you so much to Kinesis for sponsoring this video. I'll see you guys next time.